my god, we're back. Okay, these volume levels need playing around with. Hold tight. Okay. Hopefully that volume mix should be good. Whoa, here we are. We're in. We are in. My phone's just come off charge. Bear with. Anyway, how are we all today? How are we? Hopefully everyone is good. Hopefully you've managed to profit quite nicely or load up on some positions for the start of the trading week. But pretty much what we'll do, I guess, is just walk through some of the major markets that I usually like to look at, just to see what's going on, just to see what potential opportunities are in the market this week, and just see how we could look for profit from it. So, Kyoto, afternoon. Hope we're all well. Everyone who is in here right now, say hello. You know, shoot a cheeky little message in the chat. And this time round, I actually need to remember that I actually have the webcam on, because last time I did this, I was doing some weird stuff on the webcam, like with my face and facial expression. So I'm gonna just try my best to remember that, you know, I am being exposed to the masses right now. So let's not make a fool of myself. So let's roll with it. You know, nobody's saying hello to me. Great. So, you know, we'll just go with it until people. I guess there is a bit of delay, so we'll sort of wait until people are actually up to this point. So let's roll with it. Let's go. So, Euro USD. I mean, I've been updating this in the VIP chat. So, to be fair, I actually threw this through into the learning lounge. Through. Yeah, great. So pretty much everyone that follows should have seen this setup and what we're looking at. GravellX, hello, how are you today? Hope you're well. Let's actually just do a proper bit of analysis on this, because obviously prices, it has come into this region. Obviously we've had some fundamental news which has just caused it to go absolutely crazy, as per. So let's just figure out what's going on here. Okay, clearly prices is falling through that now, so don't really need to worry about that. I mean, on a higher time frame, it does suggest to me that there is something sort of laying around this region in terms of demand zone. So we will just keep that identified just in case. But the most important thing is analysing price action as of recent. So obviously, like, yes, we've seen price blow through this zone, but we understand that it was backed by fundamental news, so obviously that's going to happen. But if we sort of take the core basics of what's going on here, we've obviously had a level of liquidity built up right in this region. Okay, prices then come to clear that liquidity. We've seen it's pushed through. We've cleared that with high volume. We've then actually delivered the sign of weakness. So let's sort of just mark this up as a proper distribution rather than me sort of just winging it. So obviously these are going to represent our boundaries, both of these levels of liquidity. So we've tapped into this region. We've instantly had our preliminary supply, PSY, where there is the first early signs that we are getting rejection at this region. We then trade up into a buying climax, or a BC, where we then instantly have the automatic reaction, because at this level, when prices tapped the upper boundary and created the upper boundary, we've instantly said, yep, there's a lot of supply in the market here, so the automatic reaction that moves straight back down is indicating that. We then come up for a secondary test, which is testing the supply at this level. We see that prices actually struggled to reach the same region it reached prior, which would have been this high right here. It really struggled to continue to that point. We see a lot of rejection, a lot of hesitation there. And then obviously we move into the up thrust, but just before that, we've actually been delivered with a bit of a sign of weakness. Obviously, again, backed by fundamentals, so it does look a bit funky. Nonetheless, we have had that bear trap, that liquidation to the downside, the instant liquidation to the upside. Price is then broken lower. Okay, and we'll notice that this break lower also comes to break structure. Brilliant. And after that, we've protected the high. We've delivered that last point of supply, and we're starting to take lower. where we've just liquidated the previous low. So pretty much what we can see, if we now just get rid of all of this, because we don't really need that. Yep, get rid of that, and that, and that, and that. Let's just knock that down a time frame or two. We can now see that price has broken structure. We've come back up, tapped into. There's probably some form of a last buy to sell inside of there. We can see instantly, there's one right here. Price is tapped. Okay. But then again, inside of this region, probably have to go lower to try and fully identify this. It doesn't really seem to have tapped into anything major, I can't lie. I either would have wanted it to tap into this buy to sell or this buy to sell, and it hasn't really done either, to be fair. Nonetheless, we've still reversed, okay? Still reversed and made a move lower, so we know that the key reversal point here is going to represent the break of this low. We've had a break of structure lower. After the break of structure, okay, we're trading down. We see price mitigates that. We mitigate that. We mitigate that. So the only unmitigated region inside of that would have been that candle. So break of structure, it tapped into the supply zone. Price continues lower. Perfect. Until here, where we've come to surpass the previous low in the market. Therefore, we're going to assume that this high will be protected, and therefore we can assume that price should come to tap us into a further supply zone before continuing lower, which to me is likely going to be this buy to sell somewhere in this region, like a part of this overall buy to sell we see here, which is unmitigated. Obviously we have this or this. I'm quite preferring the look of this one. So what we're going to do is we're going to set an alert right there just to see how price reacts. Because obviously if we tap that, we see some form of rejection, we see some reversal in the market, we can then start looking to get involved in a short and trade price lower and profit from some sells, because if price does react from that region, then I'm pretty much just going to expect it to come all the way lower, to liquidate these lows down here, and then come even lower into obviously these demand zones that we look to target longer term. So there's a lot of downside potential. I mean, even if we use the ruler tool to measure how far we have from here down to here, I mean, we're looking at like 200 pips, just shy of 200 pips. So obviously if price does follow that bias, there is a lot of profitability potential, should we say, because 200 pips from a position, given this plays out, okay, that could have a stop loss of something like 5 pips, 200 take profit, that is a 40 RR trade in total. So obviously the potential there is insane, but as for now, we'll just leave the alert there. We'll also leave an alert there just so we know what price is doing. We're notified when it taps into a relevant zone, and we can look to decide what to do from there. So that is Euro USD. Now a market I do want to look at a bit more closely is pound dollar. Okay. Now we can see this is our overall zone. Obviously the refined region inside of that. Why is it not letting me move it across? Okay, so this is the overall. This is the refined. Okay. So price did originally tap us into the overall, which is where I preemptively started to see if, after tapping to the overall, because we didn't deliver the break of structure, it was hard for me to determine if this reversal was actually happening. So I wasn't, looking at that too closely. However, I was seeing, okay, well, we've had the reaction. Let's see if we then react to further supply zones, which we did not, which was obviously an indication we weren't ready to reverse from that move. Obviously means that this overall zone was not enough of a mitigation. However, this refined one we see is exactly where price has reacted quite recently, where once again we have just been delivered with a break structure downside. Very similar price action to what we saw in Euro US dollar. So what I want to see is continued bearish structure down from this level we are at right now. So I mean, I always do like fiddly things, right? And I forget that I'm on a webcam. Okay, so if you do anything weird, just don't question it, right? We all do it, sure, right? Anyway, so looking at this, looking inside of here, we just want to see continued bearishness. So I'll probably set a little alert there, so when that low is broken, I know to come back just to see if price is continuing bearish from that point. And then obviously we can look to profit further. Let me just move this down a little bit so you actually get my, no, maybe a little bit too much, sorry, that's better. Because I was doing some hand gestures and yeah, you still can't see what I'm doing. Okay, sure. Anyway, so I want to see continued bearishness from this level. If so, start looking in at some sells, just to ride price down. Now, obviously, we've just had the major reaction. I say major reaction, like it's not the best tap into a zone I've ever seen in my life, like, let's be honest. Because this is definitely a zone, a buy to sell region. But when we've seen price tap into it here, yes, we've had like liquidity built, cleared, a break of structure. It's still not the nicest reversal I've ever seen. Nonetheless, we have still obviously moved lower, reacted to supply, and continuing at this level. However, we have actually left over a big level of liquidity right in this region. Okay, now it would not surprise me if price now decides to come through, clear all that liquidity, give us a full deeper mitigation before then moving lower. However, I'm also not naive to the fact that we have still broken structure to the downside. This could be an indication of the reversal in the market. We just have to sort of be aware of what's going on. Now, the other thing that I probably want to be aware of is looking inside of here. Is there any other zones that price may want to come and mitigate, which I don't believe there is, because yeah, we've tapped into that. So yeah, pretty much price should not surpass this high if it wants to continue bearish. Therefore, if it does surpass that high, it's going to be a nice indication that price is not ready to continue lower, and instead wants to come higher to liquidate this region I was just talking about. So I understand both sides of the market. I understand both things that this market could do, and yeah, I understand how I want to tackle that given what happens. So does anybody agree with that bias? It's a big question. Will we have any takers? But anyway, continuing on. So two options: either price just continues lower from here, we liquidate this low, we hit the take profit on this trade, and we just continue trading bearish until we come and surpass this low down here in the market. So a lot of downside potential, or until we even just come and tap this demand zone. Okay, there's a couple of different things that can obviously happen there, or obviously as we just mentioned, sorry, oh, apologies about that, we could actually just continue higher, liquidate these highs, give a deeper mitigation before then reversing and distributing. I mean, there's many things that could happen. We're just taking price for what it's doing right now. What I do want to now check is, let's see what gold is doing. Right, okay, this is relevant, because we're now holding within this major demand zone that I've had my eye on for some time. So the last time I updated this into the VIP chat was when price was ranging inside of this region and we were unsure as to what was happening. Now, with the news that's come out, we've seen, yes, we have had a bit of a spike in this region. But the real question now is, will price hold this level? Okay, so we've got quite a big level of liquidity, maybe even just a bit lower than that, right here pretty much. We have this level of liquidity. Obviously, we see that with this news, we did come through to blow through that liquidity. So what I would now like to see is for price to start showing signs of bullishness prevailing. Now, in order to do that, we'd obviously want to see the reaction right now to some further demand zones, which would mean the reaction to this zone right here, because everything else has already been mitigated. So, zoom back out. What I want to see, and the main thing we want to see when we have an institutionally controlled reversal, is A, liquidity built up, B, liquidity cleared, and then obviously we want to see a break of structure higher, which would represent the break of this high. So we want to see price up penetrating through this level. Boom. But we can preemptively assume that what's going on here is that this is a test, and we may see price reacting to this region. If we then actually see the break of structure of that high, that could be indications of us going long. But at the same time, price could easily invalidate this demand zone. Well, why? Well, that's because we have multiple demand zones lower that it may want to react to instead, 1 and 2. So we are definitely aware of that. You'll notice that no matter what market I analyze and what I want price to do, what like my major overall bias is, I'm still always prepared for what could happen. If price doesn't follow the bias, it goes the other way. But then I also know how to tackle that market if it doesn't follow the bias perfectly. So it's pretty much like that same old quote, you know, preparing to fail. Wait, no. Failure to prepare is preparing to fail. That's what I'm trying to spit out. And I think that's a huge thing, especially inside the Forex market. It's like, if we are not preparing ourselves for all situations, how can we ever assume that we'll succeed and do well when we're not prepared to the best of our abilities? It's obviously a no-brainer. Okay, so make sure that yes, we have an overall bias of one major thing that we want price to do, but if we do not follow that major thing in the market, we are not left confused. We are not left sat there like, well, we're wrong. Now what? We can't trade the market because we're wrong. No, have foresight. Okay, and this is the key word. Have foresight. Always understand the bigger picture. Always understand that even if price invalidates our current setup, it is doing so with the purpose of fulfilling a bigger picture, fulfilling a higher time frame bias. All we have to do then is zoom out, take in that extra information to figure out what price is doing next. And that is why pretty much foresight is extremely important, just to ensure that we're never too fixated, never too naive on the bigger picture, and always allow ourselves to profit regardless of what happens. No, I'm not sponsored by Greg, so fortunately not. It's just a nice hot drink. Okay, I'm just going to hold the logo, so you know, no judgy people in here. Yes, I did get it from Greg's. Lovely, warming me up on this nice cold day. Sorry, I'm literally waffling at this point. Let's just get back to what I was saying. So foresight is the main thing to take away from that. So with this market, all it is a case of waiting for these alerts to ping. I'm sure you remember already what we were looking at. Let's just take one quick look once again, just to see what's going on. Okay, yeah, so we're still just waiting to see if price will come and break of structure. That's what we want to see of this high. And maybe we'll just keep this on, you know, why not? Let's just play this live, see what price does, and how we could look to tackle it. What I do want to ask is, to anyone in here, what markets are you guys looking at, okay? What are the major pairs, the major markets, whether that be stocks, Forex pairs, whatever it is, just let me know what it is you're really taking a big look at this week, what you believe there's something loading up for, and what you will try and profit from. Okay, I mean, I was sort of hoping this setup would play out a bit quicker, but obviously it doesn't want to. Looking to trade the Great British Pound to the US dollar. Oof, a little cable trade, I like it. Yeah. Is that to the downside? Is that to the upside? Is that for buys, sells? Gives a little rundown. Max, what about GJ? Is it still bullish? Great British Pound to yen. Very good question. Is it still bullish? Let's have a gander. Okay, so right, again, gain that foresight, understand the bigger picture. Let's zoom out slightly. Should try and remember what we're going on. I think I sort of remember doing this analysis not too long ago. Okay, so understanding the bigger picture, I'm understanding that we have this supply zone. I'm watching price trade back up towards it, and I would like to see the tap reversal move lower. Liquidation of these lows is ideally what we see. Okay, so in order for price to continue higher, we obviously need price to continue bullish. Okay, now what we have here is either a distribution or a reaccumulation. Now, what we can see is that as of recent, we have tapped into a clear demand zone, a very clear sell to buy, where inside of this, we've had the major tap, we've then tapped into a more refined zone, we've had to tap into that, okay, and we've had the reversal, move higher, and it seems like we are getting close to liquidating these highs. So if price continues bullish from here and we liquidate the highs in this region, we see we actually have a concentrated area of swing highs, so therefore a concentrated area of liquidity. If we see price blow through this, that's going to be very promising to me that price wants to continue higher. The only reason, I'm going to get rid of all this because it really clutters the analysis when you've got a lot of stuff like this. What was I about to say? The only reason I've got this supply zone here identified is because I'm not yet fully sure if supply or demand is in control longer term. As I said, we're still trying to fully distinguish if this is a distribution or a reaccumulation, and whether demand or supply takes control is going to be our indication and evidence to which side of the market is in control. Now, obviously, if we see price react and reverse from here, continue invalidate this zone, we then know it's demand that's in control. This is a reaccumulation. We will continue bullish longer term. If we, however, see price reach this level, we see rejection, we see a reversal, we see a move lower, we obviously know this is a distribution. We're getting ready for a longer term move lower. So that is what it tells me. Now, if we go sort of shorter term, which is what I'm sure the majority of us are concerned about, we see that when I actually did my analysis on this market the last time, which would have been, about 2 weeks ago, we see prices has followed that quite perfectly. Obviously, we had some reactions to supply. We had evidence that supply was starting to take over. Price was starting to move lower, okay? And we see many reactions to supply zones, okay? If we just identify buy to sell regions, we can see quite frequent reactions, okay? Maybe we don't fully tap into that buy to sell, fair enough. But as we go lower, just more bearish structure until the point here. Okay, we reverse, we come back to test the sell to buy, we take off. Now there seems to be a lot of volume on the upside. Analyzing the volume and spread of the candles and the length of the retracement, it seems like there's definitely a lot of demand in this market as of right now. So maybe we can assume that what price is wanting to do here is actually to continue bullish, and therefore we want to see it reacting to demand. So we go to a slightly lower time frame, we can understand and identify that this right here is an impulsive wave. We can look inside of this, maybe even on like a 10-minute, just to fully identify where the zones are. Okay, so we have a clear sell to buy there. Is there anything lower if we just follow price? That mitigates that. Okay, no, I'd say that's actually our main major zone we want to see price tap into. Perfect. Seems that as of right now, we've peaked. We're starting to reverse and curve off. Therefore, we're going to be looking for this as a target for price to come back down into, to mitigate, to reverse from, to continue higher. Now, if price actually wants to invalidate that impulsive wave, is there anywhere inside of this lower price wants to react to? I think straight away there's something catching my eye in here. Okay, so we can identify another demand zone. Here, we'll set the alert 159.71. I've already just forgot the level. That was correct, right? 159.751. Yeah, it was perfect. So I think my answer, just to cut a long story short, is that shorter term, I think it is bullish. I do believe that bullishness is prevailing. I mean, even on the 15-minute time frame here, there's evidence that bullishness is prevailing. So I just had a pop-up for a message and I started reading that whilst talking and my brain went to mush. Bullishness will prevail definitely in the shorter term on this time frame. But then even longer term, going back to like the daily and the weekly time frame, I obviously want us to remain bullish until we tap this to reverse lower, or till we tap this to reverse lower. So I think the idea being is that yes, shorter term. So for us intraday traders, bullishness is the side of the market we want to be on. To your longer term swing traders, I think bearishness eventually will prevail. But obviously, whilst we're waiting for bearishness to kick in, we may as well profit from the bullishness in the meantime. Kyoto looking to sell into Great British Pound to the US dollar. Okay. I like it. I'm pretty sure bearishness is my bias. I mean, we pretty much just walked through this like 10 minutes ago. Okay. Let's see what time frame is going to be best for this. Right, okay. So I think like the major things in terms of what's gone on here is that we've had a high created in the market. Once that high was created, we came to break structure. We then delivered the next high in the market, which failed to penetrate the previous high. So we've got a lower low and technically a lower high or equal high. So it's not high. And then we've started obviously trading bearish since then with a lot of bearish momentum. We've had a pullback recently into a supply zone. Now, if price continues taking off from here, obviously that's going to be a sign that bearishness is prevailing, and then we can look to get involved in those sells. I assume, Kyoto, that is somewhat similar to your outlook. Make sure to let me know. I'll just keep the screen there for a second. I'll let you figure out if that's quite similar to your own bias. If you know we're on the same tracks. Because if so, yep, okay, perfect. Now, anyone else who's in here, it says there's a few people in here, so anyone else, if you're looking at something similar on this market or even something different, make sure to let us know. We can definitely sort of have a walk through that. Yeah, there is a lot of downside potential in this market. I mean, if we're waiting and expecting for it to come and penetrate these lows down here, I mean, from where price is right now, we are talking about 1.8 thousand pips. So yeah, a lot of downside potential, that's for sure. Even if we only come to the downside to hit a demand zone though, that's still hundreds and hundreds of pips of potential in the market that we can profit from. So definitely nice to keep our eye on that. But again, I am being very cautious. Just because we have technically liquidated this high, which we could argue is a displacement, but because it's fundamentally driven, I always take it with a pinch of salt. So I just need to see some structure prevail for the rest of the day into tomorrow, just to see what happens. Hi James, take a look at EJ. Dean, how we doing, bro? Are you good? You good? EJ, okay. I haven't looked at that one in a very long time, I'll be honest. Euro yen. I wonder if there's going to be some really old weird analysis on this market. I always quite like coming back to the market to see that. No, there isn't. Right, I guess since we're here, we may as well do a bit of a cheeky top down. I mean, this looks extremely similar to pound yen, in all fairness. Ben, you didn't know you stream? Yeah. We don't do it as often, to be fair anymore, maybe like once a week, but I do still like to sort of hop on for like an hour just to walk through the bias of the markets I'm looking at, just to speak to people. Okay, so getting into this, if we just follow structure, okay, I mean we've obviously been following bearishness. We then, however, actually technically come to break structure by penetrating that high. Okay, so when we broke that low, that should have become a, oh god, what have I just done? Okay, after we liquidate that low, I thought I'd just broken the whole stream. I think we're good. I mean, I hope so. Okay, so after we liquidate that low, that should have been protected high. We've technically broken that protected high, which isn't the nice sign. Have we then come back down to tap into? I mean, we can argue, yeah, there is a last sell to buy in that region, but we're sort of working within two bias where yes, we've just reacted to this demand zone after breaking structure, but longer term bearishness has been prevailing, supply has been in control. So really any side of the market could take place. There's not enough confirmation in my eyes to suggest that the bullishness is definitely taken over. So I'd have to see price first invalidate this supply zone before ever considering going bullish longer term. Okay, so looking more inside of this, okay, let's just assume that as of right now, since we tap this, we're probably going to assume that we want to remain bullish. So we're going to assume that inside of here, we want this to remain bullish. This is going to be the most recent impulse inside of that. Let's go a bit lower, just to view maybe on like the daily. Go to Euro CHF and look at the daily, right? I will do that shortly. Okay, so we have quite clear sell to buy, already been mitigated. So is there anything else remaining in this region? Okay, to be fair, there's the potential for a few zones. At the bottom here, sort of look in, it's a big wick, looking through, that already got mitigated. We came down into there, because technically that is a zone that's been left over, that's a zone that's been left over, there's a lot. So what that is that I'm over fractalizing it pretty much because I'm seeing too many zones. Instead, let's sort of go back to a better time frame to view this on and just assume the overall, if we take the overall sell to buy region, which would act as this candle right there, we can keep that identified just to see if price does want to tap into this before reversing higher. If we do want it to continue bullish, I mean, there's no doubt about that. We need to keep our eye on this low because obviously whenever we see an impulsive wave up, we still need, okay, whenever we see an impulsive wave up, in order for price to go from A to B, we still need bullish structure created. And if we follow the structure inside of here, we could argue impulse correction, impulse correction, impulse correction, impulse. Therefore, this low should be protected. Therefore, if we penetrate that low, it's going to be an indication that bearishness is prevailing longer term. Obviously, we can see quite a clear distribution up here. After we've distributed, we've then come to tap into a supply zone. Lovely. Again, another supply zone reaction from there. We're continuing on. And then again, we could probably assume that we'll see another supply zone reaction from here. Let's even go lower just to try and identify that in a more refined way. Like that. Okay, so it seems like there is signs that supply is emerging and supply is taking control, so we'll see how it reacts when we potentially hit that. If we reverse from that, we're then going to expect price to go lower to potentially tap into this demand zone to continue higher. And when we tap that demand zone, we're expecting price to go higher to tap into here. So that's pretty much the bias and story for that. I mean, I don't really like trading euro yen or pound yen just because there's not, in my eyes, enough regular volume and volatility in the market. Like, it's not as nice or as clean of structure to go through. Euro CHF on the daily. I mean, I'm kind of like worried to have a look at this, I can't lie. I don't really know what to expect, so we'll see. Euro to Swiss on the daily. Okay. Wow, I've apparently done analysis on this before. Wow, this is... Yeah, I mean, this is quite something, this, isn't it? What? Fair enough. Clearly the Swiss franc has been gaining a lot on the dollar ever since 1972. Jeez. Okay, so I mean, I guess this would... Jeez. Right, okay, let's try and follow this structure then. So if we just focus on more recent, okay, liquidation. When we liquidate that, that becomes the new impulse. retracement, impulse, retracement, impulse. Okay. Let's focus on this right now. This is an impulse after we liquidate this low. Just that mitigation from that 1 day candle went down 2,000 pips a day. Wait, what? Wait, a 1 day candle? Hold tight, what? Do you mean? I'm confused. You're gonna have to hit me with the exact level or something. On the 1 day. Look at the daily. Are you talking about mitigating this? What's 2,000 pips? Oh, we're talking like further back. Like this here. At this move lower. Or am I'm lost here, I'm not gonna lie. So I guess, I mean, I assume you could easily be talking about this. Yeah, from 20, yeah, okay, fair. I know, imagine being on the right side of the market for something like this. I mean, I wonder if it'll let us replay, actually, towards this region. Oh shit, actually, I'm going to go a bit further back there. Right to there. Brilliant. Go down to 4 hour, please, let us. Yeah, sweet. Okay, so looking inside of here. Yeah, literally, from where we've come to mitigate, a buy to sell region inside of here, which can probably even refine further. Let's just look. So we have overall buy to sell to there. So I guess technically you'd probably use this wick as a supply zone. Let's see if we're correct in saying that price taps that. No, we're not. So what is price reacting to there? No idea. Okay. Forgets to put TP on, becomes a millionaire. Yeah. I mean, in all honesty, I wouldn't have probably caught that, just because, like, yeah, fair enough, the overall buy is there, but if we're taking the overall buy, price already tapped into it. If we refine that to, like, that candle, we don't really get a tap, so I don't know about that. Anyway, I just want to see, like, the price action just before we do take off. Oh shit, yeah, okay, right, jeez. Yeah, so literally, I mean, if you're edging in on any positions inside of this region and within 4 hours, jeez. I mean, within 8 hours, we're looking at 1,800 pips in 8 hours. That's insane. What actually happened? Is that just the Swiss franc? What? And when was this? January 2015. Prior to 15th of January 2015, the Swiss National Bank had imposed a cap on the value of the Swiss franc as against the euro. However, the Swiss National Bank removed the cap on the 15th of January. Yep, right there. In a surprise announcement that spooked the euro-Swiss franc market. Wow. Jeez. So basically there was a cap on the value of the Swiss franc against the euro, which is evidently why when we approached, if we zoom out, when we approached, I guess, around this level, obviously we had news that pushed us below. That the reason why there was barely any volatility in this region is because there was a cap, like price couldn't really go lower, so every time price was trying to push lower, the banks were just pushing it straight back up to keep that cap valid. And then the second, obviously, that cap was removed on the 15th. Fairs. That's quite something. That is quite something. The more you know. Was that the black swan when the euro pegged? It put or pegged? No idea. I don't know about that one, Dean, to be honest. I don't know about that one. But yes, it's mad. Like there's always something going on. Like obviously COVID put the markets into a strange place. Even like the Russia-Ukraine war put things into place. So there's always going to be these unpredictable events in the markets, always. I don't think that's something that will ever not occur. Let's do a cheeky bit of analysis on this market, considering that we're here now. We may as well go through with it. I remember it well. I mean, I've only been like looking at the financial markets for around 2 years, 4 months, pretty much. And the day, or the first sort of week or month, it was like end of November 2020. Let me see. Let me try to figure this out. Okay, so November 2020. Let's zoom into that and go back. April. Oh, that's April 22. I'm nowhere near it. Just bear with. September, October, November. Here, right here. Let's replay. And it was towards the end of November, I remember. That rhymed. I wasn't trying to do that. No, it might, maybe not the 9th then. It was more towards the end. It might have been the start. I'm trying to think now. All I know is it was around November. It was November 2020. I got into it, and the very first market I traded was gold. Okay, now I could probably go back on my Axie account and show. I don't think I use the same account now, but I could have gone back and shown you like some of the trades that I was placing on gold during this region. It was either during this drop or this drop, like one of the two, and it was just plummeting. I mean, it could have honestly just been anywhere inside of it because it was just plummeting for so long, and I was just tanking in so many sell positions over and over. Like, I had no clue what I was doing at all. Like I was just literally winging it, mega time. But it was in a region like around here where price was just tanking it, and I was just sell, no stop loss, just being daft. And it was like, I think within the first day I firstly gained like £200 and then lost 100 and then gained 50. Oh, it was so back and forth. It was gambling. It wasn't trading, it was gambling, which is something that I'm glad I've never really done again. But it's insane. You know, there's sometimes just going to be moves like this in the market where you just get involved and things just go so right. Like even the tap there, there's a clear buy to sell there. We can vaguely see on this time frame. Buy to sell there. Buy to sell. I don't know if it reacts perfectly to this one. There's one there. I wonder if price comes to react to this. It's like the chance that you manage to just get involved here and we plummet is insane. But yeah, this is around the region when I first initially got involved. Again, boom, we tap in, we plummet. It's insane. Obviously, like after we peaked with gold at that like 2000, just shy of 2100, and we started tanking it lower. I remember gold was in this stage because Luke used to always catch some crazy moves on gold, because it would literally just be a case of it would consolidate for like a week, and then all of a sudden you just have one huge bear run for a few days, boom. And Luke used to literally trade this the most and just make like a few grand in a day every couple of weeks, just from like, you see there, it's like 20th September, the next time that happens, 10th of November, again, January, like every month or something, we're getting something insane like that. But yeah, we've gone on a massive tangent there, just discussing fundamental news and impacts in the markets, which is, I mean, it's definitely good to be aware of them because their effects are very vast. Let's quickly have I feel like it was actually, I think it was gold we were looking at, right? In this market, just to see what it's doing. So bear with. Let's have a quick browse when it loads. Okay, yeah, no, fair enough. So we don't seem to be wanting to reverse there. Go back to your USD, see what that's doing. Okay, seems to be continuing lower. I mean, there's not that much happening. I feel like when you have something happen in terms of fundamentals as large as the CPI today, it's very hard to trade the markets after, because it typically spends a few hours recovering before more volatility is introduced. So I'd assume that there's not going to be much more going on, but we are still going to keep an eye and get ready for the rest of the week. But I think, unless anybody has any sort of final questions or anything final they want to say, we'll probably look to wrap this up now. We're sort of closing in on the hour mark, so it's usually how long I like to run these. Anything over, I feel like people usually start to get a bit bored, and we sort of run out of anything major to update and talk through, so there's no point dragging it for no reason. Yeah, good to see you as well, Dean. Oh, sorry, I didn't really answer that. It started in 2011. That's insane. So 12 years. And when you first started, what sort of things we do? We just sort of like browsing over the financial market. Did you take it really serious from the offset? What was the crack with that? Max, thank you very much. I appreciate you tuning in. Obviously, just make sure that you have the notification bell on our channel pinged. So then every time we do a live, it will actually send you a notification, because obviously we try to push it out on socials. Like, yes, we're going live now. Everybody, sort of keep your eye on that. But obviously, not everybody gets the chance to see that. You went full time from day one. Insane, crazy. Lost to force. Oof, not ideal. Not ideal in the slightest. I mean, obviously now you're a good decade in. What are some of the major things, if you could literally time travel back to yourself in 2011 and you had like one sentence or a couple words or a couple key points you could tell yourself, what would they be? Is what I am going to ask. Let's see. I always sort of like asking people this who've been in it for a while. Switching systems was a massive issue, right? So was that sort of a case of like you pick up a new style of analysing and trading, or like a new strategy, and you wouldn't give it long enough to learn fully and get used to? And if the profits weren't coming quick enough, you would just switch it up again? Was that the case? That is what I would assume, given what you've said. But obviously, if that's incorrect, then make sure to let us know, because that is something. I had a bit of a gambling mentality, right? Okay. So it was a case of like you were a bit more happy to over leverage and overexpose yourself for those additional profits. Again, I am just inferring. Addicted to indicators, yeah, that's never ideal. Addicted to indicators. One thing I preach, as you will probably know yourself now, is the best information we can be given is looking at a market and reading the structure and the candlesticks without a single indicator, a single drawing on the chart. Just looking at it plain and reading the structure is pretty much like the best tool that we can use. And I feel like people who use a lot of indicators miss out on that. Chasing losses and compounding loss, yeah, okay. Yeah, that is a slippery slope. I mean, I guess that's where I was quite lucky that Luke is the one that introduced me into the game, because he taught me all of these things, like instantly, like don't chase your losses, blah blah blah, all these things, because he would have been 3 to 4 years in, 3 to 4 years in when I met him. So he'd already learned all of the major stuff, yeah, like psychological stuff like that. It took 10 years to get profitable, yeah. It takes a very long time, and unfortunately a lot of people don't realise the dedication and the patience you must have. But fair play, you know, the amount of people that have come to us for help and given up at the first hurdle in terms of like the first week, first month, first year, and they don't see profitability. But I tell them to look at somebody like yourself and say, listen, be prepared, it may take you many years to get to a good point, but once you are there, yeah, well, once you're there, the potential's there, because you know, once you've proved profitability to yourself, you can just hop on a funded account. Next thing you know, you're trading with 100k, a million. Next thing you know, you're making 6-7 figures a year, easy, compounding your wins, and very quickly. You know, it takes 10 years to learn, but then 10 years of trading can turn you into a multi-millionaire, or potentially even a billionaire. So it's like if somebody said to you, okay, in 20 years I can make you a billionaire, you're probably going to say, yeah, okay, in 20 years I can make you a billionaire. But if somebody says, yeah, but 10 years of that is just going to have to be a silent grind of nothing, and then the second 10 years is where it will all come, and nobody ever wants to do that. Now, this is actually a really good point. Like, success in anything, whether that's a success in business, whether that's success in any avenue you want, success always looks like this, okay? If anyone's God, I can't draw straight. If anybody's familiar with an exponential graph, you'll probably understand where I'm going with this. So success in anything always looks like this, where if we actually put a thing on for the first 10 years, okay? So this is your first 10 years, then everything on this side is your second 10 years, where in your first 10 years, it's really slow, a really slow start. There's not really much, you know, towards the end of those 10 years, things are starting to pick up. And then within a year span, okay, or within a few years span, you're going from here to here. Whereas it took you 10 years to get from here to here. So you've done more in 1 or 2 years than it took you in your initial 10. So that is literally the graph, and that is averages, that's statistics of anything, of any business, blah blah blah. Any sustainable business or avenue that you want to succeed in is going to look like that. It's an exponential, which is why it's very much delayed gratification. It's a case of putting in the work, practicing for a very long time, until you can eventually reap the rewards further down the line. So fair play, Dean, is what I'm going to say. Fair play for sticking to it, because that shows true grit. So fair play, respect for that. But yeah, I think we'll bounce now. Thank you everyone for hopping in, for starters. Sorry it's been a bit of a waffle this time round. I mean, there wasn't actually that much structure. It was sort of just us going on tangents, but it's nice. It's nice to just have convos with people in here, and just run through some things. But yeah, thank you to Dean and Max, especially Dean for the convo. It just makes it so much better when the chat's interactive. I will be sending this through into the Learning Lounge, or maybe I won't. I don't know. I usually send them through, but I feel like there's not as. Do you feel like there's been a bit of value in this live stream? I don't know. I guess like some of the talking we've done, there's value, and I guess it would be nice for people to actually hear from you, Dean, and the journey you've been on, so on and so forth. Red November, very welcome. Thank you for tuning in. Again, make sure everybody's got that notification bell clicked, so that every time we go live, you're notified. Okay, trust me, it helps. And every time we upload a brand new video, there will be a video out tomorrow. Keep your eyes peeled. But yeah, thank you everybody for watching this. I always forget that there's quite a big delay on the stream as well. I don't know where we're up to. But everybody take care, enjoy the rest of your day, enjoy the rest of your week. Obviously, if you have any questions, so on and so forth, make sure to shoot me a message over on Telegram. But keep your eyes peeled in the Learning Lounge for additional content, additional value. Yeah, enjoy the rest of your night, everybody.